Howdy, Jacob here. Today we're looking at Yelp. It is in the interactive media and services industry, 2.4 billion market cap, 2.0 billion enterprise value. That's pretty solid. I've used Yelp quite a bit to figure out food recommendations, whether I'm in my local Nashville area or I'm on a vacation to New York, Vegas, whatever it may be. And revenue growth is astronomical with a fantastic gross margin. Still going to be a bit story-esque with our assumptions on the operating margin side, as one, they're growing as much as they are. It's grown down quite a bit, but you're still looking at double-digit revenue growth. Amazing. And then on the gross margin side, 90%. I mean, if you can become efficient with those type of margins, it's just, that's just a huge positive. So they're starting to get to, even with 6% margin, 12% return on invested capital. So if they can get up to 15, 20%, I don't know if that's possible, but if they can, then that would be astronomical. Let's see what is in what goes into this. So a heavy amount of their revenue is taken out through sales, general, and admin to get to the bottom line. R&D is a good amount as well. They're spending quite a bit more on research and development, about 5 times more than they were 10 years ago. So that's a positive. That's taking money away from you today to hopefully get more in the future by becoming more efficient, finding new ways to grow. You don't just want to hit the top line, but you want to hit the bottom line. But you don't really know with R&D. The greatest use of R&D is going to be I've talked about in the past, your Tencent, Amazon, where they invest a little bit into so many things, and some of them are duds, but some of them grow at 10,000% a year for 5-10 years. It's crazy. So I mean, the R&D spend here, if they were to move half of that, 150 million, that'd be a 250. Outside of that, you're looking at almost 20% margin. So I mean, that's not bad. That's really not bad. I'm going to lean on the conservative end, but if you understand this business really well, have done your research, and think that they can easily get to 20% even with R&D and be able to grow 10% a year for the next couple of years, this could be pretty crazy. Balance sheet, 314, 132 million cash and short-term investments respectively, with no short-term debt, no long-term debt. Total liabilities is less than the cash on hand. Extremely safe from that perspective. Cash flow has massive production of cash from operations with very little capital expenditures in comparison, and it's mostly due to stock-based compensation. However, they do buy back a lot of shares with their money, with their free cash flow. And so they do actually offset their stock-based compensation through share repurchases, which we can see by shares actually going down from 75 million outstanding to 69 million over the last just 4 years. So let's make some assumptions here. On the revenue growth side, I'll probably, like I said, err on the more cautious side, as that's the type of investor I am. I'm just going to be more conservative. I think 8% a year seems pretty reasonable. I think a lot of people still don't use Yelp, and I think that for me, when I look at places, I think that it's incredibly easy. I love looking at the stars. Some of them I don't agree with, but some of them, it's just very helpful, especially in a newer spot, to just go to a place with good feedback and everything. And so, if they can get, I'm going to do a pretty big range here because, again, free cash flow is so much higher than earnings. But if they can get up to 12% margin on net income, 16% free cash flow, buyback, let's see, just 24 million, but that would offset here about 214 million. That's a heavy amount, but I do think they can buy back 1% of shares. With terminal PE, 8% growth, still young. I mean, when were they founded? 2004. That's crazy. Okay, so, I mean, a slightly above average here, and it's not too far off. I mean, this could be very interesting. I think I'm definitely higher on the net income margin side, maybe doing somewhat of a story here, but I do think that over time, your earnings and margins should be converging to a similar point. And I think that free cash flow looks great. And so I think the revenue growth looks pretty solid. So yeah, I'll definitely be wanting to do more research here shortly. I think this is a very interesting company at a very interesting price point. Hopefully you enjoy the video and have a great rest of your day. Thank you.